Morning, everybody. You're watching SmallCapSteve live. Today it's just me and Jay. Gonna go through some of the big headlines. Let's see. The 10-year yield is up today. Lumber has crossed $1,400. Oh boy. Gold and silver seem to be sustaining. Bitcoin has come back after a little bit of a weekend blow. It's under 50,000. Canadian dollar is showing some strength. Perhaps it's because old Tiffy boy, Tiff Macklin, doesn't even sound like a real name. Sounds like an 80s bad boy. Saying he's going to taper bond purchases. Who knows? We may see the Canadian dollar actually come above par. So buckle up. We got a big show for you today. Let's get started. Jason Lutz Magoots, how do you doots?
How long did you practice that one for?
I just came up on the spot. The gears are turning. How was your weekend?
Oh, my weekend was all right. I spent the whole weekend packing, so nothing really exciting. I spent a lot of money buying new stuff for the place I'm moving into on Friday, and really nothing exciting.
Please,
what?
So say, please tell us more about how boring and awful it is to be rich.
Oh yeah, rich. I live in Saskatchewan.
Not even 30 yet, and already buying houses, fancy 4x4s. I don't even know what that is. If it's a sport utility vehicle or a piece of wood.
What were you up to this weekend? I actually didn't really hear from you.
Oh, that's because I last night I went on. I took like a day and a half off, and then I went on a big media bender last night. There's a few things happening. I've seen a lot of talk of inflation ramping up, and it's
absolutely. I mean, I was talking to you about this weekend. I've got 1,000 hobbies, and I'm in 1,000,001 Facebook groups. And I swear, it doesn't matter what the topic is, whether it's homesteading or vehicles or anything under the sun, people are talking about the prices of everything going up, and it's getting wild out there, really.
Mm-hmm. And you know what? One of the biggest predictors that people are looking to see if inflation is actually going to show up in terms of the in terms of like consumer price inflation and everyday goods getting more expensive is wages, job growth. You know, it tells us if wages are going up and if there's going to be strong job numbers. If companies can't hire, which brings me to my first article I'd like to look at today from the Wall Street Journal. Restaurants serve up signing bonuses, higher pay to win back workers.
A signing bonus for... That's like, obviously you're going to get into it, but like that headline alone, I think of like a waitress getting a signing bonus, and to me that's wild.
Yep. So very quickly here, we can see ghost kitchens are popping up all over. So kudos to the ghost. We were looking at a ghost kitchen deal the other day, correct? Ghost kitchens are popping up all over the U.S. as food delivery stores and dining at restaurants plummets amid the pandemic. These businesses, which can host food preparation for multiple restaurants at a single location, are attacking interest from investors and restaurateurs. By the way,
I'll be honest. I love the ghost kitchen idea. Low real estate costs, which is one of the highest costs of any half-decent restaurant. You don't need all that additional space for seating. Like, the margins got to be insane compared to a traditional restaurant.
And there's a bunch of deals floating around the street right now on ghost kitchen deals because it's something that is highly doable if you have the right people involved. There's a lot of restaurants that are like, here, take the keys, and it makes sense, right? Like you and I could create our own restaurant brand and take it national very quickly, scale it nationally because we don't have to have sit down locations. Which I have to say,
Stephen J's would be a great name for a restaurant. I don't know about you, but
Okay. So let's take a look at this article. Restaurants spent much of their past year trying to win back customers. Now they are struggling to win back employees. Nationwide, chains and independent eateries alike said they can't hire enough workers to staff kitchens and dining rooms. Just as COVID-19 restrictions relax and more consumers wait to eat out again, fast food operators, including owner of Jimmy John's Gourmet Sandwiches restaurants, are offering signing bonus for recruits. Chipotle Mexican Grill is offering free college tuition to employees who work at least
college.
I don't understand that line. This just doesn't make sense. You're getting free college tuition for working at Chipotle's
For 15 hours a week. I'll sign up and take my own classes.
Have you ever been to Chipotle's?
No,
I feel like that's the fun thing about talking to people from Saskatchewan. They haven't tried things that were like a fad 10 years ago that are still around. Somebody from Saskatchewan
we got
probably
excited about an Olive Garden coming here last year. So
that was a
and
fad.
Then the pandemic hit 15 years ago.
Olive Garden was like a thing in 1988, and it finally came to Saskatchewan. Oh boy. Okay, so hey, wait a minute. I have a membership. Okay, I don't know why this is doing this to me. Okay, anyways, I read this whole article yesterday. Of course, I pulled this up live on the air, and something funny. There's some funny business with my membership, but you can see there that
free college tuition honestly seems like a no-brainer.
Mm-hmm. Okay, so let's move on to another article that I want to pull up here, which is Uber and Lyft are now offering bonuses as well to get people back to work. Let me find this here. Does this not want to show up? My link's not working. Of course, it's not working. Hold on a second here. Okay. Live on the air here. I did this last night, so apparently the link doesn't want to work. Hold on a second. Just actually directly Google.
Holy man.
Hold on a second, guys. Apologies for this riveting radio you're listening to. Or is Bloomberg down? No, Bloomberg's not down. It's just that link. They must have changed the link.
So it looks like you can. Okay, go ahead.
So Uber and Lyft are spending millions on driver bonuses to end the shortage. Riders are returning to ride-hailing apps, and the companies are straining to meet demand. Misty Huffman has driven sporadically for Uber in El Paso over the past year. Even as COVID-19 surged and many of the ride-hailing app's regular customers stayed away, one recent Friday, she opened the app and was surprised to see large numbers of people requesting rides at restaurant, bars, and other night spots downtown. The whole city was lit up, end to end, she says. Huffman made $1,000 that weekend, a better rate of pay than she gets from her day job as a respiratory therapist. It's a little irony.
There's a major issue right there, but keep going.
The increase in riders, more than a third of the money came directly from Uber and bonuses. The incentives are crazy, she says. Weekly U.S. sales per customer. Well, we can see it's starting to, we're starting to ramp back up here. Ride-hailing collapsed a year ago when the pandemic set in. Volume for Uber Technologies and Lyft dropped more than 2/3 in a single week last March, according to data from Bloomberg Second Measure LLC, which analyzes consumer spending. A gradual increase this year accelerated last month as vaccination rates climbed and people returned to their normal activities. Lyft sales for the week ended March 29th were 80% higher than the first week of the year, and Uber's climbed 76% in the same period, according to Second Measure. Demand is rising rapidly with every vaccination, says Lyft president John Zimmer. It's almost like the reverse of the pandemic. What does all this tell us that's happening here, Jason? Why is it that fast food restaurants are offering scholarships and Uber is offering drivers bonuses just to hop in their cars and pick people up and take them to delicious restaurants like the Olive Garden? What is the economic outcome of all these scenarios that we're reading about?
Economically, it's not good in my mind.
You don't think it's not good? It's good. I mean,
no, I truly don't.
velocity is picking up. Let me pull up velocity here from fred.org.
You know why it's not a good thing? You just mentioned an Uber driver making more than she does in her day job as a respiratory therapist. Did you just lose internet again?
Did I?
Oh, there we go. Okay. No.
There we go.
But a respiratory therapist in the middle of a pandemic for a virus that attacks the respiratory system, that is a major red flag above anything else.
Yeah, well, look, we saw velocity just totally plummet in the pandemic. In other words, money wasn't exchanging hands. Now, money is exchanging hands, right? Velocity effectively, what is it? It's the GDP divided by money supply, which tells us how many times are we turning over money supply in a given year. And we can see here during the pandemic, we were heading towards the point where GDP would equal money supply, which would be 1. And we could tell from looking at this that money just wasn't exchanging hands. Now suddenly we got respiratory therapists hopping in Ubers because they're getting large bonuses. We're seeing Chipotle's, who normally is in the business of delicious chicken and beans and rice in a nice giant tortilla shell, brown or white, of your choosing, and I'm sure they got gluten-free. And suddenly they're giving their minimum wage type workers scholarships just to show up. What is this?
Yeah, your camera's frozen, buddy.
My camera's frozen or yours is frozen?
You're not moving on my screen.
Really?
Really?
Okay, hold on a second here. We got our producer, Chris. Is he around? Because is this a Saskatchewan thing or is this an us thing?
Okay, it's a Saskatchewan thing. Carry on. My apologies, folks.
All right. In the future, message Chris so that it doesn't throw us off. So the point being here, velocity's picking up, money's exchanging hands quicker, and we're now finding ourselves in this place where we're going to expect to see inflation pick up. Now, Nouriel Roubini, who likes to call himself Dr. Doom, so does Peter Schiff. That's a whole little thing. Those two guys both call themselves Dr. Doom after 2008, and I don't know who is the official Dr. Doom. I like to say it's Jay, but that only applies to Vancouver Pump and Dubs. Yeah, applies to very specific Vancouver Pump and Dubs. So Nouriel's on CNBC this morning, and he's talking about inflation and whether it's going to be transitory or persistent. And here's my take on it. If it's regardless of if it's transitory, which they just mean, we're going to see like 1 or 2 years of inflation, and then we'll go back to normal levels. If it goes up there and it doesn't come back down, I don't think that's transitory. That's permanent, right? Like if an average cart at the grocery store goes from $200 to $250 and it remains $250 or above 2 years later, is that transitory or is that permanent?
I mean, here's the skeptic in me. They will find new ways to say that, oh no, it's gone down, despite knowing in the real world actually seeing that price go down. Not only that, I mean, they can say inflation's transitory and everything else. I don't see an auto manufacturer like General Motors taking less for a new vehicle than they did 2 years ago. I don't see the guy that works for the government taking a wage cut compared to 2 years ago, because that'll be adjusted to inflation. I don't see anyone willingly taking a wage cut unless it's either no job or you take a cut. But I mean, I'm just not believing this whole transitory theory that is being pushed by the Fed. I mean, it's in their interest to say, oh yeah, it's just going to be short term, so they can act like they know it's coming and everything else without freaking out the masses. But I mean, the price of lumber alone, hopefully that comes down, but you can't get a 4x8 sheet of plywood for less than $100 in some regions now, and lumber just hit $1,400, so that's going to go even higher, right? Like, look at that. Since March of last year, that's last year, right? No, March of this year.
Yeah, what were you at the 5 year?
It hasn't stopped.
Here's the 5 year. Here's the all. I don't know how. Let's see. This goes all the way back to 1973. Look at that. Look at that. That is
Like
fucked.
that looks like the worst Vancouver pump and dump you've ever seen, except it's a commodity, so you know it's not going to come back down in the same way it went up. It's just not going to happen.
Yeah, Jay, I'm trying to swear less on this show, but this is something else.
Yeah, absolutely.
This chart is jaw dropping. Look at the price of lumber.
The most recent valley, when was that?
The most recent valley, like you're talking like
over to the right, right before the big run up. No, I'm
like recently.
Yeah, right there.
That was in March of 2020.
So we went from a low of.
Was at the very start.
That's what, like a 7x?
Here. You're talking about like, maybe let me go 5 year.
You might need a 5 year there.
There you go. Here's your
that low right there.
You're talking here?
What? No.
You're talking here.
Lower. To your right, there's a low spot in, it looks like March 2020. What's that at? So we closed at 264. We're at 1420 right now. And there's no signs of this thing stopping. So, genuine question here. Are futures market traders taking this thing for a wild freaking ride that your everyday mom and pop is getting bent over for? Or is this a true result of inflation?
That's a good question. And I look, guys, I know everybody watches the show and they think, oh, small cap, he's got all the answers. That's why I tune in every day. But I don't. I don't.
Like that's a very fair question in my mind. Is it futures traders taking this thing for a wild ride, or is it reflective of the actual scenario on the ground?
It's messed up is what it is.
Undoubtedly.
Like I was joking to you one day that we should go buy a crap piece of land that's got some wood on it, call it a lumber company, and take it public.
People are doing that.
Oh, we're gonna see.
Not the public part, but there's people buying up land already with lumber all over it for that sole purpose.
Yeah, I believe it. It is. It's pretty messed up. So let me try to find my next little tidbit of stories that I ran through yesterday that I thought I'd share this morning with our incredible.
I know you had
audience.
a big list.
So here's one. This is from The Economist. You like The Economist, Jason?
I don't really subscribe to them.
Well, look.
Huh. That's good news to see.
It's good news. Look, guys, this is good news here. We've got.
But that goes against everything that the anti-lockdown proponents have pushed.
I know.
That can't be right.
Oh, it's funny, isn't it? The world's coming to an end, yet people seem to be less depressed. At least less suicidally depressed.
So it looks like there's quite the range. I don't know where a lot of these places are.
Yeah, well,
Puerto Rico's pretty bad. U.S. is.
So in May, you want me to leave that up for a second? You got.
Well, just the chart. Like you see the U.S. to the left there, but then you see the long bar that goes out to the right. So it looks like they're saying Puerto Rico was above average. So there's clearly states that are above average. So you might need to break that down a bit more than normal. But
you can see here in places like Canada, we're well below the norm here, coming in at 80% of the normal. Like
that's good.
You could probably say it's small sample size, but look, I something that like a statistical thought that I had last night is, what do the suicide statistics look like relative to the COVID deaths? Like, was this a net death positive of COVID versus suicides? Because and I apologize if it seems like I'm actually trying to make light of this. I'm not, but that was one of the common arguments that we heard on Twitter in the early stages, was that if you don't open the economy back up, there's going to be a lot more suicides. and it actually like turned out to be the opposite.
Yeah, I mean, I can see arguments for both sides. Less suicides because I imagine a lot of suicides are caused by economic conditions, as in people are at their wits' ends and they can't do it anymore in terms of the struggle. And there's been a lot of government stimulus slash bracket or buckets that people can access money from compared to prior years. But on the other hand, I mean, for mental health, being locked up in four walls is not good either, right? So I can see both sides of either argument.
Yeah, well, it's just one of those interesting things that come out of trying to study a pandemic.
Absolutely.
What history tells us about post-pandemic booms? So I'm going to go back to The Economist here. The cholera pandemic of the early 1830s hit France hard. It wiped out nearly 3% of partisans in a month, and hospitals were overwhelmed by patients whose ailments doctors could not explain. The end of the plague prompted an economic revival, with France following Britain into an industrial revolution. But as anyone who has read Les Miserables, which I assume you have read, Jason.
Actually, I have not.
Okay, well, look, if you did read it, here's what you would know. You would know that the pandemic also contributed to another sort of revolution. I think it's the French Revolution. The city's poor, hit hardest by the disease, fulminated against the rich, who had fled their country's homes to avoid contagion. France saw political instability for years afterwards. Now, the interesting part that came from this, and they get into the three things that history told us, is uncertainty lingers for some. Okay, so in other words, there's going to be some people that are going to come out of this, perhaps that could be waiters and waitresses, people who work in the airline industry. I don't know, but there's going to be some people who walk out of this going, yikes, I don't know what I'm going to do next. The second thing, and this goes to the ghost kitchen part of it, is that it encourages businesses to try new things, right? And personally, the pandemic for me from a business standpoint has been fantastic. Whenever I used to go down to Bay Street on a Tuesday at 2 p.m., I'd often meet with companies, investors, bankers, CEOs, and we'd have a couple drinks on a Tuesday at 2 p.m. I hated it. I hate getting drunk. Well, not necessarily drunk, even just like having a couple drinks. I don't like doing that on a Tuesday. But, that's just part of the nature of networking and building up your Rolodex and that sort of stuff. Nowadays, it's just Zoom meeting to Zoom meeting to Zoom meeting. I love it. I hope it stays that way. Who knows? So again, first thing, some people are going to have some uncertainty. The second thing is that it encourages businesses to try new things. You know what the third thing is, Jay, that comes out of these post-pandemics?
Shoot.
Political upheaval often follows. So in many of the cases, we see a lot of pissed off people. And in Ontario right now, I got to tip my hat to Mr. Doug Ford, who seems to have accomplished what very few can. He has pissed off both the lefties and the righties. The lefties say he waited too long to shut everything down, and the righties are pissed off at him for doing it at all. So it's like everybody hates Doug Ford right now.
Yeah, and I mean, federally here in Canada, there's a lot of pissed off people with Trudeau even going, shut the fucking borders. Like, why are we not already? Like, it doesn't make sense. No, I mean, I come from the West where people tend to be unhappy with the Red Party as is, so this just adds to the discontent. But I mean, even rumblings from out East, I know you've said the same thing. Shut the borders. There's no reason for us to be taking in flights from all these different countries when we can't control our own stuff.
Here's another part of this Economist article that I found kind of interesting, is that it states that in some studies have shown that workers, in fact, do better in the aftermath of the pandemics, which from a basic like economic theory standpoint makes sense. There's demand for workers means that it's a job seekers market. You can go out, and if you're willing to work and you don't, you're not as concerned about the risks of the pandemic, chances are you have an opportunity where the sort of first mover advantage, if you will. I don't know. Thought it was interesting. Thought I'd share this one along. The next thing I want to get into here is this company called CellSci, which I don't got a lot of information on this name here.
I know exactly what you're talking about. One of our writers put something together on it for us. I just haven't got it out yet. But you are referring to the Wall Street Bets call out. Correct?
Yes. Yeah. And it's got all the short sellers up in arms that the CEO has been vocally kind of calling for a short squeeze on his own stock.
Yeah.
Okay. Well, here, let me.
Yeah.
Let me pull it up here. I got a quote from Nate the Great, as I call him. Nate says, "Nothing says confidence in your upcoming clinical trial results like begging Reddit for a short squeeze."
So there was a response to this. 1 second here.
You can see the company's official Twitter account. Look no further than CVM. Large short position, often a very high number of failed to deliver, and a 10-year landmark cancer study about to announce final data. We believe. What is it that they believe? That they're actually going to put out the data? Or that it's a good short?
There is also this tweet. I think it might have been you that sent it, so I don't know if you have it up or not. But someone effectively calls him out. I don't know who. If you want to pull it up there, Steve, I just sent it.
Oh yeah, this is the CEO. Yeah.
So
Gert McGirt.
If you want to scroll up just a little bit, that Andrew Fisher there says that insiders manipulated the stock by soliciting Wall Street Bets to squeeze short sellers in the following tweet and already caused a volume spike since. The CEO responds, "Are you one of those guys who think that CEOs should allow illegal activity against their companies and say nothing? Then you got the wrong guy. I defend CVM with the truth and irrefutable facts." But it's illegal activity for the CEO to do such things, is it not?
I don't know if it's illegal. It's tacky. Gert says it's public information, yet here we see investors ask, when is data released? Why don't they know if it's public? Is the public info you are referring to the primary completion date 1-year rule? Because you also say per FDA rules, and FDA rules are clear now. You know what I find fun about this? This seems like something that would happen in Canada, but the audience would be much smaller. There's probably 50 people who care. And then each of them have 10 fake Twitter accounts, and they're all just going back and forth at each other. This is interesting. I'm surprised we don't see more of it, to be perfectly frank.
What the stuff Musk gets away with, you would think other CEOs would start taking shots, and when this SEC comes knocking on the door, all they gotta do is go, "You permitted this guy, so you can't take me out for it." I'm actually serious about that.
Okay, so look, we've covered some of the stuff that I enjoy. Now I know we're at the second half of the show here, and I know that there's one thing that Jay Lutz loves. It's Canadian small caps. What's the big news that came out this Monday morning?
This Monday morning we saw, I guess one of the bigger articles would be that Well Health. Sorry, I'm just pulling it up here. I should have it prepared.
I got it.
Well Health has secured a credit facility through their new subsidiary. So sorry, go ahead.
Siggy announced a short on them on that's over Grizzly Research. Announced a short on Well Health on Friday. Yes,
they did. I'll be honest, I didn't take the time to read it.
I generally agree with his sentiment, but I don't think that the short report just said that he doesn't like the acquisitions and the roll-ups was effectively what I read, and I agree with that. But there wasn't at least from my brief scanning of it, I didn't see a real oh gotcha kind of. Yeah.
So Well Health this morning, they replaced a 200 million credit facility with a 300 million credit facility. Now this is the weird part to me. The credit facility for 300 million US dollars is held under the subsidiary CRH Medical, but part of that credit facility was used to pay for the acquisition of CRH Medical. So it's like they tasked the own company with the bill to acquire them. Like, I don't understand how it could actually work like that, but that's what they're saying happened. So whatever. But I mean, can you imagine going to a company? Hey, we're going to buy it for 300 million, but 200 million is coming from a credit facility in your name. What? Those aren't exact numbers by any means, but I'm just using it as an example. It seemed weird to me.
The internally leveraged buyout.
There you go. New phrase we can coin. Outside of that, Oxley and Harborside reported numbers this morning.
Woo! Let's get into Oxley. What?
So I don't want to get into too much because I'm actually working on an article in the background here.
Okay.
Effectively, they report revenues of 18.9 million, along with a net loss of 27.2 million. Big story here, which I'm working on, is they are on the hook for a joint venture partner that's defaulted on their loan.
Ooh, that's not good.
No, so I gotta do some digging this afternoon and see what's there. It's certainly interesting because the amount they're on the hook for is larger than the current cash amount. Outside of that, I mean, I'll be honest, it wasn't that bad of a quarter for Oxley. They posted some significant growth in terms of revenues, up to 18.9 million. This is a name that's taken a while to play out, and it's not the original form envisioned for the company when it was first assembled, but here they are, and they're doing not that bad.
Now, could I be so bold as to pull up the actual financial statements? Are you okay with that?
Absolutely. Let's dig into it.
Okay, just hang tight a second. Hang tight. I've got to actually pull it up here. They put out a lot of stuff this morning. Okay. This is live on air equity analysis, folks. As I like to say, it does not get much more exciting than this. All right.
Especially when you're looking at a small cap company that makes no money and you don't know when they will in the future.
So Oxley Cannabis, here we go. Let's take a look here. So we see the balance sheet down to $21 million cash. I know you look at that $90 million in current assets versus the $44 million in current liabilities. Not too shabby.
I also look at the cash compared to the payables, which isn't the best.
They got $110 million in convertible debt. So let's take a look here. The income statement, $57 million in annual revenue, which amounted to $11 million in gross profit. So 22% gross profit margin, $71 million in total expenses. In total, they ended up with a bottom line loss of, does that say $87 million? Is this?
Yes. That's for the year, obviously.
Oh boy.
Yeah, see, this is the issue with Canadian cannabis. At what point, at what scale are you going to turn a profit?
Like, just look at this. Look at that. $33 million in negative operating cash flow in 2020. I don't know what the fourth quarter looked like, but you got to be looking at this thing. And how can they actually legitimately service this debt? What's the exit strategy here? How does this end well? Is the strategy just to find institutional bag holders and get them to not?
Well, but they already have one in Imperial Brands, right? Like Imperial Brands, I think last week extended their facility or the maturity of their debt by 2 years. But with Imperial there, who's going to come in and swoop and save Oxley at this point, right? Like, I don't want a bastardization where it's 20% this company, 20% that company. It's just not going to happen. So, I mean, sure, they might be doing good things. Their revenues are increasing, absolutely. I'm not discounting that by any means. But when you see cash used in operating activities of $33 million on revenues of $57 million, sorry, that's gross revenues, net revenues of $50 million. Where do you go forward from there? Because it's clear that the current structure just isn't working in terms of actually turning a profit.
I disagree. It's not working.
Like selling general and administrative expenses of $48 million. Well, you're basically spending $1 for every dollar in net revenue you generate. That doesn't make sense.
Mm-hmm. It's not working. I don't know what to tell you. The same thing. I'm just a broken record. Canadian cannabis. It's hard, man. It is not an easy place to be. I actually have way back. If I went onto my old desktop computer, I have a PowerPoint where I went through all the news releases of cannabis wheaton back in the day and tried to understand how that thing ran. Cause it was I think it was like a 6-cent stock, and they did like a forward split of 4 to 1 and made it 1.5 cents.
Yes.
Or it was 4.5 cents and they did 3 to 1 and they made it 1.5 cents. And it already had a big share count, but I tip my caps to the deal guys behind, tip my cap. See, this is what happened to me ever since I started, with this pen. I'm mixing up words all the time and it's bothering me. So I tip my cap to them because they understood how the Canadian retail investor thinks at a very, very high level, which is simple. Low price, good. High price, bad. And people always say, well, Steve, you got to be talking about market cap. You got to be talking about enterprise value. No, guys. Low price, good. High price, bad. They figured that out very quickly. That thing ran from, after they did their forward split, did their change of business, that thing ran from 1.5 cents to I think it might have been a high of $3 and something. Either way, it went really well. Cannabis investors, they tend to, and retail investors, they tend to like stocks that trade at cheap price points.
Yeah, and I mean, you and I can scream about valuations. It's overvalued all day, every day, but that's not how the retail investor thinks. They think 20 cents, oh, that's getting pretty expensive. 5 cents, oh, that's great.
Now, to be clear, that only works if you've got tremendous tailwinds at your back. You've got a bunch of retail investors that are kind of, they're catching the FOMO because they've seen a few of these ran and they're trying to figure out how to play the space. And they go, okay, well, this one looks interesting. And they all start pouring in. I mean, I viewed LGC Capital as a name like that, where it got lots of social media traction. It had that low price point and it ran from 5 cents to $1 pretty quickly. There's a whole bunch of the names. That one had tremendous traction on social media. What else is going on in the news this morning that's caught your eye in the Canadian small cap land?
I'll be honest, I've had my head down for so long this morning already that that was largely it. There's a few smaller things, but
let's take this one here for our buddy over there from the JTD posse. He said he's telling us Datametrics having a nice day today. Was there any news from Datametrics, or is the stock just performing?
I think it's just performing. Here, let me pull it up. We'll see where she's at. She's at 30 cents, up 10% effectively, which is 2.5 cents on just under 3 million shares. So,
a lot of these stocks are having nice days. A lot of these Canadian microcaps are having nice days here. Here's Power Band Solutions. We can see it's up 18% to $1.10.
Holy boy!
Datametrics is up 9%, 2.5 cents to 30 cents. Q Media, a name that we commonly talk about. Some call it Q Media, some call it QU Media. I've learned that it basically is both people in the company call it by different names. My fine folks over there at Iguana, nothing happened.
I was buying some Iguana today. Oh, I bought it 45. I bought 45 cents. Wasn't a whole lot, just scaling in, but I see them underwater already.
Oh well, look.
You know what, Steve? What are you buying this week?
What am I buying this week? I just added the CEO of Aberdeen on LinkedIn, and if you're watching, Chris, please add me back. Christopher, I don't know what he likes to go by. I think that it's. I like the names involved. I think that Chris has a nice resume. He's going to be involved in the story, and I think that Panakin Patel, who's one of the most respected guys in the hydrogen space, who somehow they lured in, is going to do quite well. They've actually got a really interesting balance sheet in terms of just small cap names that they hold. JTD's asking us about NCU. Let's pull it up for you. JTD. If anybody else out there has some names,
Nevada Copper Corp.
Nevada
So
Copper.
this is one that it's got a ton of shares out, just a ton of shares.
How many shares are there on? It's got a $355 million market cap. So what's that like?
27.
Okay.
1.82 billion is what the good old CEO.ca is telling me. So here's my issue. At some point, that many shares out, it gets hard for this thing to move up. That's just from a technical perspective. I know very little about what this company does. I think they might have a mine or a late stage development project. I can't remember offhand. I know there was some holdups at one point in time, but I'm not well versed enough to really talk on the name.
Okay. Moving on here, we'll look at the broad market. You can see I'm setting this up, guys.
That's where you always pull it from every morning. So what's the 10-year at?
The 10-year
down.
The 10-year's it's up a little bit today to 1.567.
U.S. oil's down a tad.
Yeah. So we could sort of see from this here. I feel like gold's starting to like get a little bit of love. I think we were early on gold.
That's all right.
We hold a lot of gold on our books. You know what's having a nice morning here? A stock that we hold in our deep dive account. Ventry Point up 15%. A name that I like. I've been targeting $1 on it. Personally, hold it. We hold it in our joint account. I love George. I think that George is a real operator. I was just trying to pick up as much of this as I could there at the end of December when it was trading around 6 cents, and I didn't get hit on any of it. One of those times where, like, in hindsight, I was a little bit too cute.
Yeah. I've been there too. I missed a real good buy on GasX last week because of the same thing. So
your GasX wouldn't have been a 10x though. This would have been a 10X.
No, my gas. Well, you never know. The issue with GasX is the sentiment. I'm after it for the potential for a future dividend. Quite honestly, my thought process is if I can accumulate at this level, and even 3x's, but I get enough sizable shares that a cool dividend comes in, perfect. I love passive income though. I have a bit different strategy than you do.
Yeah. Let's see here. I can see Bruce is on Wall Street Reporter right now. He's talking about Red Light Holland. I'm not a huge fan of that name.
Nor am I.
And it looks like a bunch of people got blocked by Spruce Point Capital. We should do a deep dive into that name that they did a short report on. Was it the DNMR? He put out a short report on them.
Not the name that Grizzle's all hot and bothered about?
Yeah.
Related to Pepsi?
We should do an hour-long deep dive into this name. I don't know. It could be interesting. The short report came out last week. We can kind of see that's probably the red candle, I assume. And it looks like it's bounced back nicely here. It's up 12% today. Interesting name. A lot of people find it very intriguing. I don't know. There's not a whole lot that we really have to get into today.
No, there isn't. It's we're getting into that quiet time, right? Like this Saturday is May 1st, and May really brings decreased volume in the markets. And honestly, I think we've noticed a decline in terms of market involvement over the last 3-4 weeks already. It's not as hot as it was last year.
Yeah.
Agincourt Energy, not a whole lot. I know they're up in Saskatchewan. They were doing some drilling. I think they had to halt drilling because it warmed up here in Saskatchewan earlier than normal. But other than that, I don't know much on the name.
Uranium name, right?
Uranium, yeah. Yes, they are. My home province. There's a bunch of uranium names up there, and I get them all mixed up. There's Next Point, Fission, Chemical, obviously, Agincourt, and there's like 3 or 4 other names. I've tried to cover them a little bit, but I don't spend enough time on it to have a good enough opinion on any of them, really.
So who's coming out with earnings tonight? Is there a little company coming out with earnings tonight?
Oh, I think a little company called Tesla.
Tesla earnings. Let's go deep into that tomorrow.
If you want, we actually put out consensus estimates yesterday, I think, from the one and only.
Young Justin put some out. So what are we expecting out of these earnings?
So out of these earnings, revenue estimate for the first quarter comes in at 10.62 billion, which is up from 10.3. EBITDA estimates looks at like it's sitting at 1.8 billion, which is down from 2 billion. And quarterly earnings per share of 85 cents. So
they're now doing earnings.
They have been for a little while, yeah.
Oh man, you okay there? You want me to send you some?
All I'm saying, back out the subsidies and everything else, buddy.
Okay, well we'll see. We'll get into this tomorrow.
I may be a bear on Tesla, but I'm not dumb enough to be short it.
Oh, look at that. Let's see how the stock's doing. Going into the big earnings, it looks like the stock is actually down. It's one of the few names that's down today. It's down 1.5%.
Holy, look at all those EV stocks, eh?
All the EV stocks are doing quite well today. Lordstown, who we covered last week, is back above $10.
That's because Goldman Sachs was watching our show and put out a report right after based on what we said.
Yeah, exactly. Fisker, the only name that I'm
What
seeing,
is 7203?
wait, Tesla should be positive. Why is it coming in as red there? Oh, is it because I left it like that? I see. Yeah, Tesla's actually positive today. So it looks like the stock's neutral going into earnings today. We'll see. Interesting stuff, though. All right, Jay, let's wrap it up here. What's going on at the dive this afternoon?
This afternoon, we have the CEO of Scotty Resources on, who is going to talk about the recent merger announcement with AUX Resources. AUX is a client. Outside of that, we've got some macro coming out. I know I've got a couple more consensus estimates that need to go out this afternoon for earnings this week. There's a ton of big board earnings that are coming out over the next few days, and Justin's made a mission of covering all of them from a consensus perspective. So see how that plays out, and then I am also expecting him to cover the results. So see what happens.
Mm-hmm. Well, everybody, nothing we talk about on the show is designed to be financial advice. It's not financial advice. If you're looking for that sort of thing, go find somebody who's licensed. I am not licensed. Jay is not licensed. Nothing's a buy recommendation. Nothing's a sell recommendation. Heck, nothing is a neutral recommendation. There are no recommendations. This is for informational and entertainment purposes only. If you're looking for that sort of thing, like I said, find somebody who's licensed, not somebody like ourselves. Look, guys, you can spend your last hour staring at any screen, any place in the world, but you chose to spend it with us. I appreciate that. We will be back tomorrow covering Tesla's earnings. On Wednesday, we got one of the top guys from SEMrush joining us, a recent IPO down on the NASDAQ. Excited to cover that. Thank you for joining us, everybody, and enjoy the rest of your Monday trading day.